Hey guys, this is Ricky Analog here, and I'm just going to make a quick tutorial on how to properly calculate the float on some of these stocks that you guys are trying to trade. There's some that are going to be easy and you're going to get accurate numbers, and others you're going to have to do a bit of math and a little research, and you'll at best sometimes be able to come up with a really close guess. But I'll work my way through a few of them and you can see the progression, and hopefully you guys will be able to do this on your own pretty easily after this. So the first example I'll use is MOSY, Mosey. I go to BAMSEC for almost all my filing stuff. Type in your ticker. Let's see. And you'll basically want to look first to see if they have any recent S3s. This one does, as recent as last month, and they actually amended it even more recently. And if you go there, you'll realize that oftentimes if these companies are below the $75 million MVPHS, which is the market value of the publicly held shares, they're required to report how many shares they have, the price they're using in the calculation of their MVPHS, and also how much they've sold or raised in the last 12 months. So right here, right off the bat, you can see as of the filing of this 10/25, the float on Mosey was 7.8 million shares. And that is pretty recent. So barring any offerings they've done since then, which you can tell they haven't, since there's no prospectus supplement to this S3, unless there's like an active ATM that maybe has sold some shares into the open market since then. You can pretty much rely on that number. You can also just check real quick in the latest Q to see what the outstanding share count is. So that's 8 million. So there's not a lot of affiliates or insider holding on this. So that's a very simple example. Mosey's an easy one because their filings on them are recent. So we'll go ahead and move on to the next one we'll do is going to be Remark Holdings, which is MARK, which is one of the tickers I've had my eye on lately, and it should be a short eventually here coming up. It's getting extended, so that's why it's been one of those ones I wanted to know what the float was. So this one is a bit more tricky. You can see they do have a prospectus supplement filed that was late 2016, so it's over a year old. And if you go into it, you'll see that when it was filed, they had 21.3 million shares outstanding. Since it's so old, you can't really rely on that number fully. You have to figure out, have they sold shares into the open market since then? And if you go into their latest Q, just under their financial statements, you're going to see some stuff about in their liquidity section. And right off the bat, you see in the last 9 months, they sold another 3 million shares. Basically, to calculate this one, the most recent numbers you have are that in the last 9 months, they sold 3 million shares. They could have sold more, but you don't know if they have or not. So you just add this 3 million to what was in this last prospectus supplement of 21.3 million. So they've got about a 24.5 million share float. And that was how I calculated the one for Mark. Now, here is the last example is going to be DMPI, which is 11/21/2017, and it's Turkey Week, and we've had crazy low float runners, and DMPI is up big after hours, and it very well may be in play tomorrow. So we want to know what the float is on this thing, right? Problem is, this one's tricky because they've done lots of financings, and let me just walk you guys through it. I'm also going to show you guys something pretty tricky that they did with their last raise and some of the rules that they tried to sneak by right before their last 10K came out. So anyway, they had two S3s filed and effective at the same time. So just to show you guys, this one was for 3.5 million shares, and this one was for $100 million, regardless of how many shares. Now, the quick way to pull up the Edgar stuff on this, which will allow you to see the prospectus supplements that are attached to each S3 and their letter of effectiveness, is to just click here on this SEC Edgar link and then click on the file number. So once you click on the file number, you can see here's the S3, here's the effect, and then here is the prospectus supplement that is linked to this prospectus. Now let's do it for this one as well. Oh, don't need to open it. Separate one. Let's see. There we go. And you'll see this one actually has, now I know that it says there's 4 different prospectus supplements, but if you look at the dates, you can tell they're very close. Oftentimes that means they'll file a preliminary one that doesn't have it completely filled out, and then when they know the numbers, then they'll fill the numbers out. And so there's actually 2 prospectus supplements attached to the $100 million one. And you'll notice the date on this one, it was the most recent one, and that is the one that crushed the latest run-up. And let's show you guys how to come to a rough estimate of what their current float is. Going off of, let's see if we can find in the S3. So is it in this one? It's not. Let's see. Where did I see it on this one? I just clicked on that one, didn't I? Like I said, guys, this is one that's a little trickier, and I'm just going to try to do it as fast and accurate as possible. But so here in this S3, the one that was filed on 9/12/2016, as of the date of the filing, they had 9.4 million shares. So I'm going to just keep a running tally here on an Excel sheet. I believe we said the date was 9/12/16, something like that, close enough. So copy paste, and then we're gonna have to go through this and find out how many shares they've sold into the market through their financings since then. So let's look at the first of the 2, the S3s. So this one only has 1 supplement attached to it. They only did 1 offering with it. It was, the S3 is for like 3.6 million shares or something. Yeah, and they did the whole thing. They used all the registered shares for that S3 in 1 financing. And let's see. It looks, from the looks of this one, I believe they did all of them. So we're just gonna add these, or we're gonna add these to the float, and then we're gonna move on to the other S3, which has 2 offerings they did. Take the later date on them because obviously the more recent one is the one that had the numbers filled out on it. Oh, sorry. I'm going to open these in separate windows so that I can just do this quickly. So this one was for 2.7 million shares, and then also another 2 million shares that are warrants that have an exercise price of $3.50. You also want to notate that because those are shares that if price gets back up to those levels, you will have to know that those may be sold into the market and squash any kind of run that they get going. Obviously, price is pretty far away from there right now, so moving on to the one they did recently was for 8 million shares, and then another 8 million shares or 8 million warrants to purchase shares with an exercise price of $1.25. That $1.25 number may become important tomorrow, because right now as I'm talking, this is trading. It hit a high of 106 so far in the after hours, and knowing how tomorrow may get, it may run up over 125, and a lot of these people would be smart, if you ask me, to unload their shares into it, because I have a feeling this company is the type that would be doing some reverse splits in the near future or whatever it takes to keep their price above $1. They did just get a delisting notice on 11/3, November 3rd. So what was that, like 16 days ago or 17 days ago? 18, if my math was any good. So we're just going to sum this up, and this is our rough estimate for the float. And I will tell you, I already know that it's more than what their Q states as outstanding at the or in their OS. Well, the thing is that is as of November 8th. So that's very recent. 21.6 million shares outstanding as of 2 weeks ago. And we got a number larger than that, right? So all that tells me is that their float is close to their outstanding shares. It's really close. But let's just say it's about 20 million. They're trading at about, they had a close of close to $1 today. They can use the highest closing price in the last 60 days to help them get their MVPHS as high as possible. And in the last 60 days, it's going to be somewhere around like $1.30 or $1.40, I believe. So even at those levels, let's just say they have 20 million shares at $1.44. Their MVPHS is only 28.8 million, and they can only sell a third of that every 12 months. So 9.6 million, and we know that they did a raise for more than that in September. So as of now, they cannot tap any more of their shelf, even though that $100 million shelf still has quite a bit of money left on it to raise. They need to wait till either they get their MVPHS up or they do some other tricky stuff. But for now, I don't think you have to worry about any offering coming during this next run up. But I do want to show you something, and that is this. A company can only raise a third of their MVPHS every 12 months if their MVPHS is under 75 million. But if their MVPHS becomes more than 75 million, then they, until their next 10K, they don't have any restriction as to the amount of money they can raise. And also, if they're over 75 million at the time of their 10K, that gives them one full calendar year to raise without the restrictions of the under $75 million level, which we call in trading, it's called the baby shelf rule. So they don't have the restrictions of the baby shelf if at the time of the filing of their last 10K, they were over 75 million. Now, I've got the chart up here. I'm going to make this one full size. And let's look back more than a year. So, this was their last run. And people knew that there was a shelf, an active shelf. But they thought because the price was so low that their MVPHS, they all thought that they were under the restriction of the baby shelf. And people didn't realize how much DMPI could actually dump on the open market. But the problem is, if you look at their filings, their last 10K was 9/13/2016. If you go back to 9/13/2016, you can see they had prices all around the $7 level. And actually, that was what they were using back then to calculate their MVPHS. So, as of the filing in September for their 10K, these guys were above the baby shelf rule. Meaning that until the filing of their next 10K, which was on 9/27, they had no restrictions on how much they could raise. So, it should come as no surprise that they got this offering off on 9/20, which was just 7 days before they filed their 10K, which at the time of that filing, they're now under the restrictions of the baby shelf. So this one really caught a lot of people off guard because they thought that it wasn't going to be as toxic as it was. But I want to show you guys exactly why it was as toxic as it was. And it was because you need to go back a year and see where they were trading at the time they filed their last 10K. Use that as a starting point for determining whether or not a company is going to be under those baby shelf restrictions. If they are, then you can look at their most recent shelves and you can usually determine how much money you can expect them to raise based off what they've raised in the last 12 months and what their max raise is. So hopefully this has been helpful. Hopefully you guys can see how to calculate the float, whether you get an exact number that's very reliable or you have to do a little math and research and have to use more of an estimate. And also maybe learn a little trick or two about what some of these companies are doing to slide in at the last second and get off a raise. So thanks for paying attention, guys. Hope you learned something. This is Ricky Analog signing off. Peace.